Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. We are up 10% for the quarter as of this recording, right? I was thinking about that and I'm like, well, it's exciting, right? If we look at the markets here, we're up. So if we go to July, right in here, right? So here's the beginning of the quarter, right about here. So we're up 10%. And I thought, is that odd? Right? That's one of those things. You guys know me over the years. I like, if something happens or someone tells me a stat or something, I'm like, is that good or bad? I mean, it's fun. Oh, so-and-so scored 15 touchdowns. It's like, is that normal? Is that above average? I don't know. Is it better than the other guy? Whatever. So I was like, well, 10%. It seems odd, right? So we took a look at this. In fact, it is very odd, just so you know. And I point this out because we're going into September, which we know what is the weakest out of all the years, right? I'll show it to you again. So here's the actual performance going back 100 years for the Dow. Over the last 100 years, September, it's the weakest, right? Over the last 50 years, oh boy, it's the weakest, right? Not so much in the last 20 years. But I was like, 10%, it just seems a little bit high. So what I did, we took the S&P and we went quarter by quarter. So just show me the performance. Nothing fancy, right? Okay, yeah, you got some bad quarters in there. Mostly all the quarters are green, and that's just typical of an uptrending market over time. And I was like, well, what's the average here? Like, let's look at some of the data because we're up 10%. That seems a little bit weird. So if we look at the S&P, and we break down the performance by quarter, not by month or day or year, but by quarter. We look back just like we did on that last second to last slide with the Dow. But we're using the S&P this time. Dark blue is going to be since the lifetime of the S&P. It started in September 1928. Oh, almost coming up on an anniversary. So the first quarter, we're not in the first quarter. Second quarter, okay, we're not in the second quarter. We're in the third quarter. 1.3% is the average. Over the last 50 years, less. 25 years, less. And that's, why, right? It's because we're including September. And September tends to be weak. So we said, okay, well, since the S&P has been a thing, average performance is 1.3%. We're at 10, right? You could see how that's really odd. Fourth quarter historically is the best. You get that last end of the year rally, Santa Claus rally, as people say. But let's just skip that. Let's just say all quarters, right? What's the average performance of any quarter? 2%. We are so far above where we should be in a given quarter. It's odd, right? It's really, really odd. If we take it a step further, so how often is a quarter positive, right? Because we're positive, we're up 10%, and we'd have to go back quite a bit to obviously pull back and not be a positive month. 60% of the time over the lifetime of the S&P, the third quarter is positive. So 6 out of 10 times. And here we are just screaming higher, 10%, little by little. So it is odd, right? When you look at the S&P going forward here, I'm not saying that we can't, it can't be an outlier move, but by this magnitude, do you think that we go into, think about this, we're 10% in August here, mid-August. Do you think we go into September and add another 10%? Like, what's the probability that we go another 10% up versus 10% down at this point, knowing we're going into the weakest month of the year and knowing that we are already way past anything average? Think about the mindset of people that know this. Now, you know this data, and you're not the only one that knows this data. I'm not the only one that knows this. The professionals out there are like, it's a little much, right? We are past where we should be. We're going a little faster than what we normally do. What does that mean? Does that mean people sell and go away? No, people don't just sell for no reason. They sell because there's a start of a pullback. But it means that people that were looking to put new money to work, are they going to do it? Are you going to do it? Are you going all in here and saying, this is my market, right? We're up 10%. I'm going all in. I hope not, right? This might be the time, and we're doing this here at Jazz Wealth in our funds. We're saying, maybe we'll just take a little profit, maybe just 1%, something simple. And then if we keep going, man, maybe we'll take another 1%. Let's put a little cash on the sideline, knowing that we're going into the weakest month of the year, historically and statistically. Why don't we have a little cash? We're already outperforming. Everything's above average. Think about that, right? These are those little moves that you can make. And I'm not saying in your brokerage account or your trading or whatever. I'm saying in your 401k, right? Your TSP. Maybe I'll take a small piece of that. I'm ahead of schedule. Take a small piece and I'll just go put it in that money market fund that's going to pay me 5% anyways. If the market goes up another 5%, think of how extended that would be. You'd still get to 5%, right? Provided that it was within a year. So I want you to think about that here. It's one of those things, those little tiny adjustments. I'm not saying go all cash. I'm not saying go 50% cash. I'm just saying take a sliver off. Things have been really, really well. Maybe if it fits you and you're ahead of schedule and you pay attention, maybe you do something like that. If it's not something that you do, that's what we do. I hope you'll give us a chance here. We're one of the only financial advisors that actually does this and doesn't just stick you in a mutual fund and pat you on the back and says, hey, we'll catch up with you at Christmas time, right? Yeah, we're always at it. We love doing this. And when we spot things like this, we're taking advantage because we do things differently. We only grow as a company if your account grows. And so if we find even a fraction of an opportunity, we're going to do it because it means we make more money. I'm not ashamed to say that, right? Because we're not charging you for some like, oh, you called me, I'm charging you $20 or whatever. No, we know that if your account grows, we make more. So we're going to take you along for the ride. So if you can't do it yourself, you don't want to do it, you want some help, and you want all kinds of other planning and help and education along the way, I hope you'll check us out at jazzwealth.com. Ooh, I'm excited. Let's see what September has in store.